welcome to slide pack 18 of the financial modeling program. What we will talk about today are other valuation methods. So what we've seen in an earlier slide pack is the discounted cash flow method of valuing a company. What we will do now is talk about a few other ways of valuing a company. So now with that, I am going to switch over to my Excel first, and then from there I will go into the internet also. So just as a refresher, the enterprise value of a company, often shortened to EV, is the equity value plus the debt value minus the cash. Now what we'll do is we'll take Cisco Systems as a sample company, and it's a publicly traded company, and let's try and calculate the enterprise value of Cisco Systems, and I'll show you how to do that. So the first thing that we want to find out is what's the equity value. Now the equity value for a publicly traded company is also called its market capitalization, which really is the total number of shares outstanding multiplied by the share price for this company. So now let's first go out and get the share price for Cisco Systems. And to do that, what I will do is open up my browser, and it opens up into finance.yahoo.com, and there's this little box that says get quotes, and there I type in the name of the company I want, and you can see as I type dynamically, Yahoo starts to give me a whole host of options. So I click on the first one, which is equity NASDAQ for Cisco Systems, ticker symbol CSCO. That's the one I want. I do not want the ones below it that are equity Hong Kong and Stuttgart and all of that. So I'm going to click on CSCO. Now it goes off and pulls up a little summary page on Cisco Systems, and it tells me here on the right hand side that the last closing price for Cisco Systems was $17 even, which is actually pretty surprising because typically shares tend to have decimal values next to them. So Cisco closed at an even $17 as of the 17th of March 2010. So I'm going to go back to my Excel and say, okay, I know that the share price of Cisco Systems is $17 even. So I've got that there. Now the next thing I want to find out is what are the total number of shares outstanding. So now, where do you think we can get the information on the number of shares outstanding? Typically, your best source for that information and for the most current value of that information is to go to a public company's investor relations section on its website, where they typically tell you what the latest financials are, and they go into details such as the number of shares and things like that. So with that, what I will do is open up a new tab, and I am going to just do a search and say, okay, what is the website for Cisco Systems? And then it says here it's cisco.com, and it tells me that it's the networking company Cisco, which is the company that we have in mind, and it takes me to Cisco's website. Now Cisco's main focus for folks that come to its website is selling its products and services. So now I look at the site and I say, where is the information on its financials? I don't see it anywhere. Well, like I said, very few people come to the site for its financials, and the ones that do know that they can actually find it in a section that's typically about Cisco Systems down here at the bottom, and there it says investor relations. So if we click on investor relations, we should find information on its latest financial report. Okay, So we're on investor relations, and Cisco is talking about the various presentations that it has going. But here it also says we had an earnings announcement on Feb 9, 2011. Okay. Now every time a public company announces its results, it's got to file those results with the Securities and Exchange Commission. So if you look here for Cisco Systems, it says SEC filings. So that is one way of going to the filings. The other way is to try and look at a news release around the Feb 9th time frame. So why don't we do both of those, just so you get familiar with both. So I'm going to open one link that's the SEC filings. Okay, now it's said around the Feb 9th time frame, and if you look at the numbers on the left under filing, it says 8K, 4K, etc., etc. Now, you also have this drop-down menu that says I've got annual filings and I've got quarterly filings. So why don't we make our work easier and say we need quarterly filings? Now, the second thing it says is all years, and actually it pulls up quarterly filings before we can do anything else. And as you can see there, Feb 23rd is when they filed their most recent quarterly report. So it's called a 10Q if it's a quarterly report, where the Q stands for quarter. If it's an annual report, it's called a 10K. So I click on this quarterly report, and what it does is it opens up a new window with the quarterly report for Cisco Systems. Now, like I said, we can also go into either events in news or financial reporting and try and find out what its most recent financial filing was. So let me go into events in news. And I'm doing this just to sort of show you how you might go to a public company's website and find out the information that you need. So here it talks about events, but what we want to jump to is news. So I click on news, and a lot of this is marketing. So you sort of have to cut through a lot of that and get to press releases. And down here it says read more press releases. So as you can see, they do not necessarily make it very easy for us to get to some of that detail, and they sort of do on the flip side. If you understand SEC filings, then it's easy. If you don't, then it's a little less easy. Now I am going to use a filter tool that they have here, and I'm going to say, just take me to Feb 2011, and I'm going to say filter now. Okay, now I've got releases in reverse chronological order with the most recent on the top, and I go down and I'm looking for something that talks about Cisco's financial filings, and I do not see it, so I press on next. And I continue to read down here. And I keep going, and on the second page I still do not see a press release on their quarterly financials, so I press next again. And finally, I see something that says Cisco reports second quarter earnings on the 9th of Feb 2011. So I click on that. And this gives me a press release that talks about Cisco's earnings. And the date is Feb 9, 2011 that you see right here. So now let's just take a look at this. And it has a lot of data initially, and then after that it goes into about Cisco, and it almost might seem like, you know, you've reached the end of the release, but you really haven't. Now this is where they hides the wrong term, but they actually have their detail down here. So the first thing they have is their income statement. So what we are looking for is the number of shares that Cisco has. And the date that we want is Jan 29, 2011, which is the most recent date from our perspective. So down here, you can see that the shares, there's the basic shares and the diluted shares, and the number that you want to use is the number for the diluted shares outstanding, which is the slightly bigger number. Now, 5,587. Now, note again that it says everything here is in millions. So what we do is we take that 5587 and we go back to our Excel and we say, okay, it's 5587. And I am just going to make a note here saying that it's in the millions of shares. Now, my Excel is now set up to calculate the share price multiplied by the total number of shares to give me the market capitalization of Cisco. And because the number of shares was in the millions, my market capitalization also is in the millions. So it's, in other words, Cisco has a market capitalization of $94.9 billion. Now the next thing I want to do is find out what Cisco's total debt is. And to do that, I am going to go back to Cisco's most recent financials, and a debt is a liability. So what I want to do is find out where this is in the liabilities section. So I scroll down and I come to Cisco's balance sheet, and it talks about the assets, and I keep going down, and here it talks about liabilities and equity. So the first thing it talks about, again, everything in the millions, it says short-term debt, and I'll highlight this for you, is 3089. So I go back here and I say, okay, I know that they've got short-term debt of 3089, and I just, before I forget, I'm just going to get this millions down, in fact, on all of these. So 3089 is only their short-term debt. I'm going to go back to the financial report and see if there's any other debt that Cisco has outstanding as a liability, and as it happens, it says yes, we actually also have long-term debt, and the value of that long-term debt is 12152. So I go back to my Excel and I say, okay, they have an additional $12152 of long-term debt. So the total debt held by Cisco is $15 billion. Now the next thing I want is to subtract out the cash. Now cash, is, we all know now, is a balance sheet item as an asset. So it says at the very top on assets that cash and cash equivalents, right here, I will highlight it, is 4924. So I go back to my Excel and I type in 4924. Now companies like Cisco tend to not hang on to cash, but they tend to want to invest that cash. And so we also want to make sure we capture all of these investments, because ultimately this is an investment that can be converted into cash and can be used to pay off your debt. So if you look at current assets and investments, you see that they've got 35305 of investments. So I say, okay, I go back there and I'm just gonna say plus 35305, and so that tells me Cisco actually has a total of cash and investments of 40 billion, which is much bigger than their debt of 15 billion. So financially this company is actually doing quite well. And I scan through the assets to see if they've got something else that's easily convertible into cash. And accounts receivables is not, inventories is not, deferred tax assets is not, other current assets is not, property and equipment, goodwill, purchased. So I go through the list and I say, okay, cash and cash equivalents and investments are the only two that can be converted quickly into cash. So I go back to my Excel and say, okay, I am satisfied that I've got the market capitalization, I've got the total debt, and I've got the total cash. Now I apply that formula, and what that tells me is that the market capitalization plus the debt less the cash is roughly $70 billion. So Cisco as a company has an enterprise value of roughly $70 billion, right? So that's one way of getting the enterprise value for publicly traded companies. Now, the other thing that people do on Wall Street very often, or on in investment banks all over the world, is they look at various multiples to try and figure out what the ratios are. So for example, what they'll do is they'll look at the enterprise value and they divide that by revenue for the last 12 months, and then they'll come up with a ratio. Now these numbers here are not for Cisco Systems, and for this exercise we are not going to go into the math of calculating the LTM revenue. LTM stands for last 12 months, but this is just to show you that now that we have the enterprise value, we can divide the enterprise value by the revenue to get a ratio that's 1.3, and we can compare that ratio with companies that are similar to Cisco to try and value companies. The other ratio people calculate is enterprise value to LTM operating income. Another popular ratio is enterprise value by LTM EBITDA. So, once you have a number of ratios, what you can do is you can say, okay, I am going to use an enterprise value by LTM EBITDA of 6, and I know what the EBITDA of my company is. So when I multiply the two, I should be able to back calculate the enterprise value. So you can calculate the enterprise value by applying a multiple and multiplying it by either EBITDA or revenue or operating income. Now another very popular one on Wall Street and for publicly traded companies is price to earnings ratio. Now the price to earnings ratio, basically the price that you get here is not the enterprise value, but what you get is the equity value. So once you have the equity value, then you can add the debt and take out the cash to get your enterprise value. Another ratio, price to forward earnings. And when they talk about forward earnings, they're talking about anticipated earnings for the next 12 months. Now, just another note, LTM often is also replaced by TTM. So some folks like to say last 12 months, other folks like to say trailing 12 months. So that in a nutshell is how you can find out the share price, where you can get information on the total number of shares outstanding, where you can get information on debt of publicly traded companies, how you can figure out what the cash and cash equivalents are, including marketable securities that can be easily sold off and converted to cash, how you calculate the enterprise value, and a couple of valuation multiples that you can use and multiply with the right metrics such as the revenue or the operating income to calculate the enterprise value. So with that, we will end this slide pack. Thank you very much.